Gold prices continued higher heading into the weekend, extending to new year-to-date highs in the August contract, north of 1360, and then they got a modest pullback heading into the end of the day, but still held prices very firm, settling roughly unchanged on the week. So we did make a higher high this week. We were unable to have a higher settle. It doesn't necessarily stem the momentum we've seen in gold over the last several weeks. We've seen gold really take off, and I think at this point gold prices are going to remain elevated, not only because of the geopolitical risks that are rising out there, but also because we have Fed in play and likely not going to be cutting next week at FOMC, but certainly going to be cutting in the months ahead, and gold prices now starting to reflect that. So gold momentum, gold buyers, the need for gold, whether it be insurance or a hedge of some kind, they're still out there and rising. And if you look at the dollar today, it's a great example. The dollar shot up, basically it hit a huge move higher. After retail sales we got that were stronger than expected. Likewise, a lot of other currencies around the globe not outperforming, helping to bid the dollar. But it didn't stop the gold buyers from coming in. Yes, it stopped us from settling higher on the week, and yes, it stopped us from making even higher highs than we did. But we didn't see any massive pullback, any massive sell-off. Gold settled in the August contract just south of 1350, which is, while we wanted to see a 1350 or higher settle, we are still well above where we were not too long ago. So at this point, I think the dollar and gold moving in tandem is just an example of sort of the flight to quality bid that's been missing in gold, in the gold markets over the last several months. Now it has come back. So despite the fact we have a stronger dollar, we do have higher gold. And lastly, let's look at the positioning. Probably the biggest reason for what we've seen here is that speculators are continuing to pile in. This week being no different. We saw them add to their highest, longest position since March of 18. So right now, gold buyers continue to find reasons to get back in, and it is driving prices higher. Obviously, we could see a modest pullback. When you see speculators get in at that amount, they tend to turn around very quickly if there's a reason to. And right now, you could end up with stocks rally, or if something happens with trade, or if the Fed says, whoa, put on the brakes next week. We're not sure if we're going to cut regardless of what the market says. Then, yeah, we may see a little bit of a downtick in gold as those speculators look to exit. But up until this point, it continues to be very bullish momentum, very bullish charting, the technicals are right there, and we are in kind of an uncharted territory. So it's not like we're looking for any technical resistance here. I think right now we're in no man's land in gold, and it could even extend higher. Could we get to 1375 or higher if the Fed comes in very dovish next week? Absolutely. And will the dollar be a deterrent to that? It may be, but it wasn't this week, and I think that's very significant. So as we move into the weekend, gold prices off their highs, but still maintain that positive bullish momentum.